UK September retail statistics show an impressive month for retailers. Retail sales this month grew 6.5% year-on-year. Joining me to take a look at the UK economy is fixed income manager Alvin Baker. So Alvin, some are questioning the credibility of this month's statistics, with the Rugby World Cup bringing an estimated 446,000 visitors to the UK. Was this impressive month for retail a significant reflection on the UK economy?
It was a bit of a surprising statistic, though the bias seemed to be in that direction from anecdotal surveys from the BDO, CBI, and the BRC, the latter being the most closely market watched. Having said that, it was a very significant beat, and the ONS did go out of its way to explain that it will add actually 0.1 percentage point to Q3 GDP. We've had monthly swings like this in the not-so-distant past, around the time of the Olympics in 2012 and the Queen's Diamond Jubilee, etc., in the royal wedding. So the UK market is quite used to seeing these monthly swings. Was it a true reflection on the UK economy? I think it is, actually, because I'm thinking that between now and the end of the year, we've got the main dynamics at work, and they're going to accentuate real spending power for consumers. Taking average earnings, they're running at about 3% year on year, and this time last year they were only 1%. And on inflation, we've got the opposite dynamic. We've got inflation running at close to 0%, and this time last year prices were rising at about 1.2%. So these are really powerful dynamics which are going to support retail spending in the crucial run-up to Christmas. The implied deflator shows that goods and services are still falling at quite a rapid rate. We've got minus 3.6 against 1.4% compared this year to this time last year. So there's plenty of reasons for people to believe that this trend, this long-running trend of retail sales growth is going to continue for the foreseeable future, and generally where there's going to be surprises, there'll probably be to the upside.
Bank of England Governor Mark Carney suggested he, along with the bank, would prefer that the UK stay in the EU. We're currently seeing the pound soar against the euro, so are you expecting this trend to continue?
I think it's still quite early for maybe Joe Public to start thinking about this referendum, but it seems to me the Bank of England, the CBI and other sort of business-orientated groups really want to lay down the gauntlet to basically say better the devil we know than the devil we don't. Leaving the EU would create a huge amount of uncertainty, and that's obviously something the Bank of England, with the economy still suffering from headwinds externally, probably wouldn't want to have to tackle something like an EU exit or Brexit. Yes, I can understand the rationale for Carney and Co. to come out with this stance. On that basis, with the macro data basically pound supportive, I think we might actually see from current levels the pound sort of moving higher against the dollar and strengthening also against the euro. We as a company are bearish on euro sterling, looking at to possibly test the lower region of its recent trading range, which is about 72.5. It's recently been in the 72.50 to 74.50 range, currently around 73. And against cable, it's come up against resistance once again at the 155 handle.
Prime Minister David Cameron has claimed this week China will bring £30 billion in deals and investments to the UK, with the UK expecting to receive a focus in infrastructure and investment. The UK could also become a centre for trading China's currency. The deal has been described as a win-win economic alliance. However, China still isn't out of an economic slowdown. So does this deal pose risks?
That's quite a good question. The deal as such probably doesn't pose significant risk in isolation. As most commentators have said, it seems like a bit of a win-win situation. China has obviously got probably a little bit more to gain than the UK has from it. It wants to get itself included, its currency included into the SDR basket. and having a successful offshore currency market based in London will do it no harm whatsoever. I don't think the problems that the Chinese economy is having is going to affect sentiment that way. The recent debut sovereign offering that coincided with the President's visit this week was very successful. I think that it's a very good start for this particular alliance. And I don't think the UK is going to be isolated if something bad was going to happen to the Chinese economy from here on in, more so than the rest of the world or indeed Europe. The UK still has probably two smaller exports going to China in any case, and we're looking maybe for volatility more than outright, and maybe we're looking, as I said, for a little bit more stability to come from China, though.
Well, Alvin, thank you for speaking with us today. That's all from me, but as tomorrow is the last day of this trading week, be sure to click back. But for now, goodbye.